Welcome to Second Take, the show that takes a look at the issues behind the news. Infrastructure remains under the spotlight in South Africa, with government leaders insisting that the program is delivering, while many others are questioning whether it is really having an impact. Terence joins me to discuss the major gap in perceptions. Hi Terence. Is the multi-billion-rand infrastructure program starting to live up to expectations?
Well, if you look at the figures, there's definitely been a pickup. If you look at this Reserve Bank figures and you look at the amount of fixed investment coming from the public sector, primarily driven by the state-owned enterprises like Eskom and Transnet, there has been a large rise over the last 2 years. And if you go into different areas of the country where these projects are going, so if you go up to Limpopo and you go to the Medupi site, although it's been closed for 7 weeks and it's just starting up again, you see a big change in that area. So you see this big power station going up, but it's not just the power station. There's everything that's going on around that power, the new housing developments. There's a lot of real estate. There's a real estate boom. There's new shopping centres, new petrol stations. So there's definitely a lot happening in those areas that are nodes of these infrastructure. So those power station sites, the Kusiles, the Medupis, probably the Ngula. And then, if you go to some of the port sites as well, you can see there's a lot of activity. And then some of the factories in South Africa are also being affected by the supply into the Medupis or into the rail engineering works of Transnet. So I definitely think there is activity. There are a lot of jobs. We could see when Medupi is at full building construction peak, there are 12,000 people on that site. So it is having an effect. But in the public consciousness, in the public imagination, when the World Cup was happening, we could see the roads going up around us and we could see the stadium. So as an urbanite, we're probably a little bit distant from the project pipeline that currently is underway. It's a little bit more in areas that are not visible to us. But I don't think we're feeling it. A lot of us and the businessmen and construction sector is saying, where is this multi-billion-rand or trillion-rand pipeline of products? Why aren't we feeling it? Why are order books still so anemic? Why aren't they picking up like they were during that period prior to the World Cup? So there's definitely, as you say, a perception gap and a credibility gap that we're not seeing. Like, for instance, at ArcelorMittal, they're not seeing the order flow for their steel that they were expecting from infrastructure because the building and construction industry orders aren't there. And the cement is a fairly similar story. We're seeing rises, and I think it really is underpinned by the big public infrastructure program. But there is a lot of frustration. I think slowly government leaders, although they say, this is happening, and if you looked at President Jacob Zuma's State of the Nation, it was a litany of, in fact, I think he lost his audience as he read out this list of projects that they were doing around the country. And there is a lot happening in this space, but it's not having the impact on society that people were hoping, and it isn't really stimulating growth as people were hoping. So we're still talking about 2.5% growth last year. It's better than nothing, but it's not great. And it's definitely nowhere where we need to be in terms of getting jobs created in this economy. And the outlook for sub 3% this year again is not a very good outlook. So, yes, it is happening, the figures show it, but it's not really being felt in the way that people were hoping.
What needs to happen for this credibility gap to be closed in this area?
Yeah, there is a credibility gap, and people are saying maybe it's just another example of, government, having good, big, grandiose plans, but it all falls down on the lack of ability to deliver and implement. And I think there has been an element of that, and I think that especially happened in the early stages of the build-up, say at Eskom, where they had projects that, they didn't really have a project capability. They needed to rebuild that. They didn't have the skills. They had projects that needed to proceed or go ahead prior to final proper design, and we saw that particularly with Medupi, and we've seen it with the costs of Medupi and Kusile. They were procuring just at the wrong time. When the whole world was booming, we were procuring, and we can see it in really looks like expensive kit. We also had to procure construction services at a time when there was a lot of World Cup activity, so there was a premium there. And then you can see, with Medupi especially, there were a lot of design issues that came in. So there was that element that I think so people say, well, it's failing because we don't have the skills and we don't know how to manage projects. But that has been built up, and I think there's been quite a good catch-up. And I think that if you look at both Transnet and Eskom, which are the main vanguards of this investment program, there's a lot more level-headedness around what can be spent yearly, what is our capacity to expand. Whereas in the past they would talk about 90 to 100 billion rand a year. Eskom used to say that that's what they're going to be spending, and there was a lot of modelling and excitement built around those. So they've looked at their numbers again. They said, look, we really don't have the capacity to spend at those rates. We can really only do around 60, 65 billion rand a year. That's more realistic. Similarly, Transnet, after the problems they had with the pipeline, they've had to do a lot of capital scrubbing, and they're a lot more prudent in the way they come to market. And that has led to some delays. The diesel locomotives and the electric locomotives, there's some that are already out and they've been tendered and they're out in the market and they're being built. But there's a whole big next tender that has been delayed because they're really scrubbing the capital program as well as aligning things with government. So I think there's that element, and there's been a lack of coordination, and that's where the Presidential Infrastructure Coordinating Commission is supposed to come in, knock heads together, say, it's not just about a port expansion, it's about what about the upstream linkages, the rail linkages, is there actually demand for this? So there's a lot more sophistication coming into the modelling, and that sophistication sometimes leads to delays. But I think the real problem is the real base load for the construction sector, the steel sector, the cement, is really private investment. And the problem in South Africa at the moment, and possibly in the rest of the world, but in South Africa definitely, is that there's not confidence to invest from the private sector. And that confidence has been further eroded over the last year, I'd say, by especially what happened at Marikana, the 44 the miners and the security guards, 44 people in all getting killed in that way. And there's been a litany of other events around lack of industrial peace and a whole lot of other sectors, which has eroded confidence. Now we've entered a period where the rand is very volatile. I mean, we've seen it really move weak. And that, makes your numbers, you need to look at your numbers. Then we also have where we could be investing is really in the mining and possibly agriculture and those sort of spaces. There's been a lot of policy uncertainty in those spaces. We still were speaking about nationalisation this time last year. We can't believe it now, but we were. And, so there was that cloud that hung over the industry. There's been changes to a lot of legislation. There's also, the emphasis on, you need to do beneficiation, all these sort of things that hang over an investment decision now. So, and also then we've got the commodities that are entirely wrong to be investing in, especially platinum, because there's just no demand at the moment for platinum. So it's a mix of things, but really there's a lack of confidence in this economy. So the private sector is sitting on, say, 660 billion rand worth of cash holdings, and really government, labour and business need to do a lot more to come and meet minds and really build up the platform again for private sector investment, because until and unless we have the private sector adding its investment weight to the gross fixed capital formation stock that's being built, the public sector stuff by Eskom and Transnet is not really going to be felt, and people are going to say, where is this? Why is it not bringing the stimulus we were hoping for? So I think there's a credibility gap that I think is being closed to a large extent at the state-owned enterprises around their management of projects. I think that was a very, very big problem, especially post-World Cup. We just dropped off a cliff entirely. And there's been a lot of scrubbing, of capital scrubbing. And then there's this issue of investor confidence, which I think, if the private sector eventually starts investing, and we've got the base load now it's like a inverted base load that's being provided by these long-term infrastructure projects rather than the private projects, we could then have a much stronger surge in investment, and then we could start seeing this having an impact.
What about the threat posed to delivery by corruption and South Africa's skills inadequacies?
Well, I think that is the Achilles heel, and it's going to be the Achilles heel in South Africa for many, many years. And the problem is especially around the social infrastructure programs and the things like school building initiatives and the social housing that needs to be rolled out, and the services and that need to go into new townships and new industrial areas. Really at that level, where it's often a municipal level, we're seeing a lot of corruption still in the system, and a lot of vested interest in corruption not going away. And I think that the Finance Minister, Bruyn Gordon, was quite frank about the fact that there's a lot of incentive to sustain that sort of level of corruption, and it pushes up the costs all over the place. We've seen when there's going to, what's happening at Public Works is a real debacle around most of their projects, totally inflated prices, not just in Kandla. Just about every project they've touched, the prices are inflated, right down to when people procure websites that they're paying way over the odds, and it smells of corruption. You don't pay that much over $40 software, you're paying 40 million rand or whatever for your actual website delivery and management. You kind of smell that there's something wrong there. So that's a real problem, and it's a problem also for investor confidence, going back to the last question. Because if it's seen as a place where you can't get anything done without greasing the palms, that's another reason to look elsewhere. So I think it's a big Achilles heel. And the other one that's a chronic problem is the skills dearth, skills deficit. And really it's not for a lack of resources, because if you look at the budget that was announced last year, you see those 200 billion plus worth of resources, and most of which goes into basic education. It's a lot of money. Relatively, it's one of the highest education budgets in the world. The problem is we aren't getting value for money there. And the OECD came out with a report this week saying that the survey of South Africa, this is a critical gap in South Africa. Yes, we've got what's been very good since apartheid is South Africa's been able to raise the access to education, especially for young people. So school attendance levels are very high. But the problem is, what quality of education are people receiving when students or pupils are at those schools? Are teachers doing their job efficiently? Is there an accountability in the system from the principal all the way down to the student teacher or the teacher that heads that subject? There seems to be a lot of gaps, and the OECD suggested that South Africa needs to start really benchmarking itself a lot better within the OECD system as one of the remedies. So obviously we have to build the infrastructure, build the new schools, employ the new teachers, train the new teachers, but we also need to start building in a system to show up where we are really weak or where we are really strong. And at the moment, unfortunately, it's going to be really areas of weakness that are going to be shown up, both at the scholar level, so the scholar will be benchmarked against scholars in the rest of the world, and at the teacher level. So the teachers are also going to be benchmarked. What sort of outputs are coming through from teachers? I think that's quite an important. So have better visibility of where the gaps are, and I think that's an important remedy. But then also, trying to make sure that the education dollar, gets stretched further. So we do have a lot of education rands in the system, and those rands just need to be, more efficiently spent and prioritized. But also, people, when they are getting paid a teacher's salary, we should be expecting value for that salary, and that people aren't, only seeing it as a part-time thing and spending the rest of their time, running another business, another service outside of that. And I think that is quite a common reality for a lot of teachers. So I think those two Achilles heels, they really a drain on short-term investor confidence. Corruption is a real drain on it. Long-term investor confidence, the education crisis is the biggest issue, because if there aren't the skills, then you have to bring in expatriate skills. Can you bring them in? The Home Affairs is, you have to get through that loop. And if, there's a whole lot of reasons why that people may become resistant if they don't have the skills base, skills talent pool, because there is a war for talent out there. And, if you want to be an attractive investment destination, you have to show that you're building up that talent pool. At the moment, we don't seem to be doing very well in that regard.
Thank you. That's the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.